Hello, everybody. This is Alan Wang with Alan Wang Realty Group at Keller Williams, Santa Clara Valley. I'm extremely excited to bring you our August 2022 Silicon Valley real estate update. A lot going on in the market and a lot of changes. And without further ado, let me get to it right now. Now, the market previously in June was pretty frozen. June, July was pretty rough for sellers. A lot of folks have gone on holiday, on vacation, more than we have ever seen before. Buyers were concerned, and they're in the wait and see mode. They're very worried about rising rates as they have risen multiple times this year. Their stock options have been down this year by large amounts. A lot of concerns. So a lot of buyers were on the sidelines through June, July, or just not here, not present, including agents as well. Now, buyers, again, like I said, they're waiting and they're seeing. And so the buyers that were around were the ones that were looking for deals, looking for their lowballing sellers and trying to get deals. And hard to blame. The market wasn't looking good. Sellers were worried and buyers were trying to strike while the iron's hot. Now, what we were seeing was, of course, the majority of sellers were not going to bite on a low ball offer. I don't think most sellers are that desperate unless they were in a desperate situation. Everybody has their line, and most of the low ball offers exceeded that line. And so what we have been doing is when a seller has been on the market about 30, 40 days, depending if the lead flow goes cold, once the leads all go dead, then that's when we discuss a price improvement. And what we have been seeing generally with majority of our homes, the seller's first list price is adjusted for the market. But at times, sellers want to be a little more aggressive and see if they can get a little bit more. When that strategy fails in about a month or more, it is time for that price improvement. And when we do that price improvement, that gets another batch of buyers interested. And we have generally got into contract in and around that number, not generally over that number, but typically a little bit under that number. And we get into contract. For some properties, there is another subsequent price improvement depending on how aggressive we were on the initial list price. And so hence, if you're a buyer, you're going to write a reasonable offer, something in the realm of what I just discussed, then you'll be able to get in contract. If you're just tossing extremely low ball offers trying to get a deal, no guarantees that strategy might work unless you run into a seller that's extremely desperate for some reason or the other. As a seller, you're going to see longer days on market. This is absolutely the case. We're not doing 1 week flying off the market anymore. We're doing 30, 45 days and counting in some areas before we get that offer that we can work with the price adjustment in the middle. Now, again, great opportunity for buyers, but I'll put a but in here. There has been more activity picking up end of July and into the beginning of August. The last 3 weeks, we've definitely been seeing an increase in mortgage applications because rates are actually down, and we'll talk about that in a little bit. Rates are actually back to reasonable levels, and also the stock market has been performing better. And so buyers are poking their heads out. Inventory is still quite low. Despite the fact that buyers have been in wait and see mode, there's always been low inventory. So for the buyers that are out there, I hear there's a lot. They go, I hope there's more inventory. I hope there's more inventory. There's not a lot of interesting products out there, Alan, and that has traditionally been the problem. There's not a lot of inventory on the market, and so if buyers start poking their heads out again, they're all still looking for a deal. That's absolutely true. But if enough folks are, and if there's enough momentum, you know how the herd mentality goes. Perhaps there's a turning point in the market here. 3 weeks, a bit too soon to really say. Buyers currently are still deal hunting at the moment, but something to monitor, and I'll keep you posted as the weeks go on. Some economic factors at a macro level, inflation, of course, the biggest concern on our country's mind. And every time you go to a grocery store or go have a meal or buy a car or get gas even. But we are seeing some downward trends on inflation. There was actually a dip in inflation this last month, which is great. We'll talk about that shortly as far as the numbers are concerned. Gas prices have lowered as well, so potentially a little relief there. If, in fact, the monetary policy is working and inflation is going downwards, there should be more optimism for the real estate market. Previously, there were rising interest rates, and you were seeing rates hitting over 5%. Well, the demand for mortgages completely dropped. And with that drop, banks realized we're not getting anyone signing up for mortgages. And so they had to bring the rates down to an attractive rate. And so currently rates are in the low 4% range. I'll talk a little bit more in detail. But that's actually quite palatable, much better than 5%. Any downward pressure on interest rates is always a good thing for buyers. Another issue, stock market was extremely depressed, but improving. The stock market had an amazing July, actually. I wouldn't say amazing, but a July of a recovery and doing better. And so, with these two factors, things are certainly, well, these three factors, things are perhaps trending in a better direction. The recession looming, I mean, we still might be heading into a recession. It's hard to say at this moment. With these three factors trending downwards, at least hopefully we're in a better direction. However, a recession could still be looming around the corner. Speaking about inflation rates, here is the inflation index, consumer price index, previously at 9.1% in July, June, July, and now dropped down to 8.5. So that's, again, trending in the right direction. We hope it continues to go that way. We could argue that perhaps monetary policy is working. That's something that we need to monitor there. Rising interest rates. I like to put this chart up just to remind everyone how high interest rates were in the 80s. And just want to keep reminding you of that. You'll hear your parents talk about it. You're all so spoiled. We had interest rates at 18%. Well, it's true. And real estate and homes were still sold during that time. And so, yes, I'm sorry you did miss the 2%, 2.5% rates, and this is a nationwide rate, a conventional loan at 5.54%. But in the grand scheme of things, still low. But although I know it jumped from 2.875 to 5.4, nobody wants to see that kind of jump that quickly. However, more rate increases are coming from the Federal Reserve. But I just want to reiterate that this is in the long run, we're actually doing pretty well. Now, there's some other programs you might want to think about. Most of us do not expect these rates to be this high in the near future or after inflation is under control. We would imagine that the Federal Reserve would loosen these interest rates as the inflation rate gets under control. So that being said, in the short term, you might want to get a loan that'll keep your monthly payments low now. And so there's definitely programs to look into. ARMs, adjustable rate mortgages for 5 years, 7 years, 10 years, depending on how long you want to lock for, you'll get a lower rate there. Although we're not seeing too much of a difference between that and the 30-year fixed. But that's one option. Interest only is another potential option where, again, you're just worried about your monthly payment and perhaps you'll refinance out of this loan once things get better. And another option is to increase the loan time frame, the horizon, from 30 years to 40. There's some programs that way. Again, you're just trying to get relief on the monthly payment, knowing that you'll likely refinance out of this loan anyways. A few ideas for you. These are some rates from Wells Fargo Home Mortgage. We wanted to give you more local rates. The rate you saw is a more national rate. We tend to have better rates here because there's more flexibility on what's called the jumbo loan product. And so on the jumbo loans, which most of the houses in this area qualify for, the jumbo 30-year fix is at 4.375, and then the jumbo 15-year fix is at 4.125. A 5-year ARM, 7-year ARM, 4%. So something to think about. Again, rates are low fours. Don't just keep reading the news and keep thinking rates are over 5. They're not. If you happen to be buying a conventional loan, and the mortgage amount is lower, you're in the upper 4s, possibly low 5s for that product. So I mean, actually, obviously, the fact that we're in the jumbo, that the rates seem to be much better in the jumbo, which is majority of the houses here, anyways. Not as bad. I suggest you reach out to us so we can connect you with our mortgage folks to look into possible rates for you, since everything has changed and this is actually trending better for our buyers, or to reach out to your mortgage person and see what their rates are. NASDAQ. So beginning of the year, we were at a peak, actually, of over 15,000 on the NASDAQ. Then last month, it had dropped all the way down to overall a decrease of 24%. Now remember, 2021, we had an increase in the stock market of 23%, specifically the NASDAQ. In 2022, we had a rough time in the first couple quarters and it dropped to 24%. And now, net, we're down 20%. So we had a 4% recovery in July. which is great news. It's something to be excited about. Again, anything trending in a positive direction is a good thing for everybody. But that's 4% more towards down payment. And so you might see some of your tech clients saying, well, I want to cash this out. My stock's doing really well. And so certain companies are doing better than others. They might choose to cash out there and perhaps buy. But again, we're slowly seeing this. I'm not saying there's an immediate turnaround here in our buyers, but these are trends in the right direction. Unemployment at COVID, it peaked at 16%. We're now down to 4.2%. I mean, actually, it's quite low. Traditionally, we see the unemployment rate at about 4.6%. And so if anyone wants a job, there are jobs out there. The issue right now is finding talent and finding the right people. We actually have a worker shortage. Not quite sure why that is. A lot of folks might have exited the workforce and enjoyed exiting the workforce during COVID. But just curious, it just seems to be a lot of demand. And I think we ramped up after COVID, we ramped up much harder than we expected. And a lot of folks are still not back into the workforce. What are our projections here at Allen Wang Realty Group? Well, again, macroeconomics, inflation trending downwards. Again, it's just 1 month, so don't get too excited yet. We need to see this trend for multiple months and quarters at a time. That way we know that the Federal Reserve's monetary policy is working. And with that, there might be a light at the end of this tunnel. Our government passed the Inflation Reduction Act. Despite the fancy name of the act itself, it seemed to provide a lot of benefits to climate control, especially in the world of housing, credits towards home improvements for energy savings in that realm. So kind of tied in inflation with kind of climate control and those types of incentives. I mean, especially a lot of it has to do with housing, so it might help get some activity going in the housing sector for home improvements, et cetera. So, obviously our government's trying to work on reducing inflation. So hopefully all these measures are going to come into place and really help out. The Federal Reserve will keep raising interest rates until inflation is under control. However, I think folks are adjusting. Banks are adjusting. We are adjusting to how they're doing it. We're almost expecting a 0.75 increase going forward here. So the mortgage rates have baked that in, and they kind of know what to expect. And things have stabilized. That shock factor might be gone at this point. And as long as folks know what to expect, things tend to stabilize and people know how to operate. Nobody likes the unknown, right? No one likes not knowing what's happening next. And so hopefully that helps stabilize things a little bit so that the real estate market can get back. But I mean, the market's still fine. I mean, it's not a horrible state here. I would say we're trending more to a balanced market, but I mean, we're still technically in a seller's market because there's just not enough housing. But it's definitely trended more in the favor of buyers. I think we've been spoiled. 1 week on the market was never scalable. We're talking 30, 45 days on the market, which is still a good market for sellers. I think we got to look at overall. They typically say it's a buyer's market when there's 6 months of inventory. We barely have a couple of months of inventory at this point. So it's something to bear in mind. If you're a seller, the peak has come and gone. If you're looking at numbers from April and May or holding on to that, I'm sorry, those numbers are long gone at this moment in time. June, July, the market was frozen. Homes were not selling. Again, you were getting lowball offers. We were just looking for one good buyer to be reasonable enough to offer at a point that was close to our list price. That's all we were looking for at that time. Again, there's some possible thawing in the market. That frozen market, we're seeing more activity. We've been getting a lot of calls from buyers. We've been getting buyers into contract. Some of our top mortgage folks in this area are noticing an increase in pre-approvals daily. Don't know. 3 weeks is not a trend. It's hard to tell if this is really a trend or not. But hopefully, in the weeks to come for you sellers, that there are more buyers if there's more buyers out there, so more interest, you can get those buyers that are off the fence, get them to start moving. We get rid of these lowballers that have been coming that aren't really serious, just hunting for a deal, and seeing if we can get some real buyers in your property. And that's something we should monitor in the weeks and months to come. There's still no guarantees in this market. Your home will sell at a price. The question is, are you okay with that price? The homes are selling, but also many are not. And so it's just going to take a little bit of time to find the right price that folks are transacting. And for many of you, that number may not make sense. If there's a number you say, this is not the number that I am looking for, then we need to make a decision there. And we will make a decision, say perhaps it's better to rent it out or et cetera. There are other plans you could ride out for a better market. But again, buyers are coming, but still, we're not saying they're ready to overbid and all that. They're looking for deals right now. That's what they're looking for. Buyers, opportunity is knocking for now. And I put in quotes, for now. At this moment, there are deals all around you. Sellers are nervous, but most are not desperate. Something for you to realize. Just because things have shifted a little bit does not mean that the seller's going to fire yourself for 20, 30, 40, 50%. Right now, most sellers are at about maybe 10 to 15% off peak pricing. And traditionally, I would say that sellers are being stubborn and all that, but I don't think they are. I think most of us have, and they know, they read the news, and us agents have adjusted their expectations in and around 10% to 15%, which I don't think is unreasonable, but I think a lot of buyers are trying to go 20, 25% or 30%. And I mean, this is not 2008 where had a subprime meltdown. This is most likely temporary. So as a buyer, if you're reasonable, there's a deal to be had. If you're unreasonable, then we're just going to reject your offer and not even respond. Or maybe we'll counter, but we're not going to counter you anywhere close to your number. So, I mean, don't hesitate to ask or try, at least ask the question or write it. I mean, there's no harm in doing so. But I mean, put yourself in the seller's shoes. Would you take an offer that's completely unreasonable if we're expecting to get out of this, hopefully in the next 1 year to 18 months? Put yourself in the seller's shoes as well. Now, as a buyer, I know what you're thinking. I'm worried. I don't want to buy at the peak. I don't want to miss the bottom. None of us do. Yet it happens every day. By the time the market turns and things are looking on the up and up, you've already missed the bottom. And so it's really hard to know what that is. If you're buying for your family, I would say right now is a good time. These little micro factors that we're seeing that could be shifting the market, you might want to get ahead of it. Right now, if this trend continues in the positive direction, then we'll have multiple buyers out before you know it. And I always advise buyers, and it's just human psychology. This is always the case with human psychology. You all want to follow the herd, right? You feel comfortable when your friends and everyone's going a certain direction, and you feel like you can't go wrong. It must be right. But let's take a step and think about this, though. If 10 buyers are fighting for a house and you're going hundreds of thousands of dollars over, waiving your contingencies, trying to close at the speed of light, barely have time to look at a home, and you're fighting with 10 people, overbidding, does that feel better than what you're seeing right now, where you're going, well, how much under list price can I go? I can reserve time for my contingencies. I can do inspections. I can come back another weekend and bring my parents, take a look at the house, see if I actually like it, and not rush into this decision. I don't know. I mean, I'm thinking, actually, doesn't that sound quite good? You can write your own ticket right now as a buyer. The power is in your hands. Whereas when you follow the herd, you don't have any options. And also, let's be honest. The folks that are out there that are successful in investing or real estate investing, they don't follow the herd. Right? Warren Buffett always says, if there's blood in the street, I buy. And that's where I think wealth is created and opportunities are taken advantage of for us as savvy folks here. Following the herd does not usually equate to getting good deals in the market. So overcome that fear. And in the long run, Silicon Valley has always done well. Overcome that fear, and I think you have an amazing opportunity. We may or may not catch the bottom, but things are definitely trending in your direction for now. Thank you, everybody. Again, this is Alan Wang with Alan Wang Realty Group at Keller Williams, Santa Clara Valley. We're here to help you with your buy and sell needs or investment needs. Anything you need, just reach out to us. Give me a call, 408-313-4352. Email me, alan@alanwangrealty.com, or you can direct message me through Instagram, Facebook, LinkedIn, Twitter. You can find me. Have an amazing day.